Are we entering a new bull market, and how long will this bullish window last? Yes and yes.
Yeah.
I do believe that we have a lot of things setting up very nicely for a bull market to kick in. We could be in a new bull market and still have periods of consolidation that last for quite some time. It would actually be the most ideal scenario for Bitcoin, in my opinion. But for me to consider that we are in a bull market, I want to see weekly uptrend defended and 30k area flip support. As long as we're above the support that delivered the moves to new all-time high during last bull market, I have to assume that we are in a bull market territories. The short-term window stops when the H4 trends breaks on Bitcoin and we start having consolidation or retraces. Every time we started losing the H4 trend for the first time, it was moment of consolidation incoming. It's been the same case all year long, basically.
So for me, I do think, obviously, hindsight being 2020, like, we are in an uptrend, which I guess you could call a bull market, right? Depending on your definition of it. The biggest mistake that people make when they think about a bull market is that they only define the bull market by the mania stage towards the end. People think, oh, the bull market was when Bitcoin went from 30k to 69k or whatever, right? But it's not actually that. That's the final blow off phase of the bull market.
Yeah.
Where, yes, it's very obvious then that it's in a bull market, then everybody starts to talk about it, and then it's in this like almost normie bull market cycle, and that's what people like to imagine an entire bull market is like. But for most of the bull market, you do have this kind of choppy, grindy, not super explosive, kind of like people are still on edge, not super sure if it's a bull market or not.
Yeah.
Like when we came out of 3.5k last cycle, there were weeks where prices were at like 8.5, 9,000, and we were like, oh dude, like I think that was it. I think that's a bearish retest, and then now we're gonna go back down. And then it just kind of sat sideways, and I remember sitting there for like months, and I was like, dude, I don't think this is gonna go up. And then when it did go up, I think it was in August, the thing that got me was it went up and then it went down. I remember it went down, like it reverted the entire thing. And then I thought to myself, see, I'm a fucking genius. It is not it is not a fucking bull market. And for my definition, like, yes, this is basically a bull market. Now, if you're asking for a time window, I do think it is ETF based, because this entire move began off the BlackRock announcement, right? I think the BlackRock announcement was around 20k, around that area. And I do think that a lot of the current feel that we have is ETF. So I would say this bullish window is a couple months, 2-3 months, and if the ETF gets approved, then there's your for sure bull cycle, right? Where you have like maybe a year, 2 years, or whatever, a typical cycle lasts. Until then, I'm treating this as a bullish window for the next 2-3 months, even though it is a 90% estimated approval rate. 10% is still a lot. It's not like a 99.999% approval. Like there's always a chance that
there's always something that can fuck things up, of course, but it kind of feels like the ACC is cornered on that part, to be honest.
To break down like the point of that question is, yes, the red button is disabled. Yes, you should be taking longs anyway. Yes, you should probably be building positions when things consolidate or pull back. In a sense, whether you have the answer or not, the results are the same. You're doing the same thing. You're looking for longs in an uptrend, and you're looking to profit off of very favorable catalysts. And I think that's the most important part. Like that's the best takeaway message that you can get, right? Where it doesn't matter if you think a bull market is going to last 3 months, 4 months, a year, 2 years, whether this uptrend is bullshit or not. It's unfortunately in an uptrend, and you should be taking longs. And that's a take home message.
Yeah.
Like in a bull market, you take longs, and in this market, you take longs.
Yo, Pierre and Loma, do you guys increase your position size during high volatility like this, and especially when the market is on high bullish mode?
Yeah, so for sizing with higher volatility, you actually don't want to size up because you're absolutely going to get fucking nuked. Like if things are moving 30 fucking percent, like you don't want to be 3x leverage on it, right? Because it could easily pull back quickly like 20% and then you're fucked. But generally speaking, I think I get what you're trying to ask, which is when there's more opportunities, do you size up? And the answer is yes. But occasionally, like you'll see like P&L screenshots and stuff like that, right? And it's all relative. Like size is all relative. Like I actually don't go past 2 to 3x, and that has been true almost my entire career. Even when I was in my degenerate gambling phase, I never took a positions past like 10x. And even on the 10x, I don't think I won many of them because I was so emotional. You know, like I had $200,000, but then like say you're 10x and then that's 2 million and you're not used to controlling that type of money, you're gonna fuck somehow. So just like your sizing, don't compare it to other people is my point. Compare it to yourself and eventually one day it's going to look a lot more than it is right now. I wouldn't go past 3x, my man. There's so many opportunities, bro. Like coins are going 30, 40, 50%. If you're in TRB, even at 1x, dude, you would have made like literally maybe like a 30x with the funding. There's so many opportunities out there. You don't need to risk it all on one trade and go balls to the wall.
How to properly size the compounding? Do you consider that as a brand new position?
General rule to start with is, yeah, dude, like just treat it as a new position because it's a lot easier to kind of manage your trade setups and not let it get too far ahead of you where, you know, maybe you compound so much that you have 3 times the size that you would want and then you don't know where your stop is, you don't know where your targets are or whatever. So yeah, I always treat a new addition to a position as a new setup. And then as you obviously get more experience and you start doing that more often, you're gonna find, I guess, scenarios where that's not the case, where you're just gonna keep adding and that's in and of itself one large swing position and not all those separate adds are separate positions. But that's, you know, like that's where the it depends comes in. But general rule of thumb, it never hurts to just treat it as a new position where you know where you're wrong and you can cut that amount out and then maybe add somewhere else or something, right?
Thoughts on relatively negative funding on some of the top performing coins during initial stage of this pump. He's talking particularly about Solana and ING. If I remember correctly, I remember you making a post during last bull market about not treating funding the same way that we do during bear market, like not taking this as a sign that it's bearish because people are overreacting or overbuilding position on a shitcoin, but actually just a proof that they are willing to pay a premium to be in position.
Oh no, that sounds about right. Yeah, if it's with a trend, yeah, they're most likely willing to just pay that small fee to follow the trend. What's nice is when it's counter trend, where I guess right now would be considered counter trend, like if Solana's going up on every time frame and you have negative funding, that doesn't necessarily mean that it has to keep going up, but it's a good reason as of late, right? With all the new meta, the new play being negative funding is good because like even if that's not true, there's 100+ random traders that would just throw money on it simply because it's a negative funding now, right?
Absolutely.
Like some people love to simplify strategies and sometimes it just goes down to, oh yeah, negative funding, okay, I long it.
So it could be an interesting setup in the process. But you see what we just did here? It's pretty much what I'm saying when I say try to make like your plans in advance. Try not to be bullied by the way the market moves minute to minute and try to like, even if you never come back to that setup, even if it never materialize into anything, at the very least, because you're planning and planning setups left and right, you're kind of mentally prepared to be taking the setups whenever they actually trigger instead of like opening the chart and being like, oh nice, I want to take that and kind of mess up the system or just oversize or not sizing enough. So yeah, I think during the next few days and weeks, every moment you have free, you should be trying to plan setups left and right. Don't take them all, but that way you're not going to get bullied and surprised by market movements like we've seen recently.
Yeah, I think that good note to also wrap this up on because that's something that regardless of what assets you take, what point in the market you're trading in or whatever, you can always use that advice where you need to have a plan. Not because you have to follow it entirely, but because it helps you not panic or not be too euphoric. For example, like I kind of wanted prices to come up to that, mid 30s level, but I didn't think it would come so soon. But just because I had that idea in my head, it made it easier to take profit, right? Like it made it a lot easier to be like, oh, okay, like I'm euphoric. I think prices are still going to go up. It's an ETF approval. Let's go. But it's easier to take profit when you planned on taking profit or you kind of already imagined price doing that. That will help your execution so much, like so much.
Yeah, definitely. Fully agreed with you.